Well, what's up, guys? Welcome back to the channel again. This is going to be a late video for me, but we're going to talk about PCPL. I'm just going to get it out of the way. The reason I want to talk about PCPL is thanks to one of my elite patrons over on my Patreon. He requested that I talk about that video. If you guys want something similar for you, let me know. There's a link of my Patreon down in the description. You can become an elite member. And I can do a video specifically for you. So we're going to talk about PCPL, and PCPL is a very little known SPAC. Not a lot of people know about it because it's not an EV SPAC, it's not a space SPAC, it's not I don't know. Nobody cares about logistics or supply chain management, but you should, because if you like, I don't know, any consumer good at all, you need supply chain management. You do, and you need this company. So PCPL is a SPAC merging with a company called E2Open. So that's what we're going to talk about in this video. And I have a surprise for you guys. My wife actually finally bought me a crystal ball. This is ridiculous. But I see a good future for E2Open and PCPL in this crystal ball. Or maybe it's just my water on the corner of my desk. I don't know. Stick around. Hey guys, welcome back to the channel. Thank you so much for joining me for another video. I know it's late, I understand, but I'm posting this video for someone who lives far, far away. So when I post this for him, it's gonna be like his morning time. So get over it. And if you don't wanna watch it, go to sleep. I don't know, I'm gonna go to sleep. I'm probably sleeping already. Guys, thank you so much for joining me. We're going to talk about PCPL. It's a SPAC merging with E2Open. E2Open is a massive, massive logistics company. So we're going to talk about a lot of stuff. We're going to talk about what is supply chain management, why is it so damn important. We're going to talk about the total addressable market and how that's growing. We're going to talk about a term called white space because I think it's pretty cool to understand how companies can grow their business and increase their net retention rate. So we're going to talk about net retention. We're going to talk about a lot of stuff with this company because I'm fascinated with the capabilities that this company has, and I really think that this is still a relatively inexpensive SPAC. I really, really do. It's only up about 15% over the last month. It's up about 8% this week, so it's a good week to talk about it as well. And I understand why this elite patron of mine wanted me to talk about this company because honestly, it's exciting and not a lot of people are talking about it, if anybody. So we're going to talk about it today. But let's just jump over to this Seeking Alpha article that explains the merger. This merger was announced in October. This SPAC is still under $12 per share. After hours, right now, it's trading just under $12 per share. And this is not a tiny company. You're going to see that this company is profitable. They have positive cash flow. They have a little bit of debt, but they're using the money from this SPAC merger to pay off their debt. And really, it is an exciting opportunity. So, supply chain management software company E2Open goes public through a merger with blank check acquisition company CC Neuberger Principal Holdings for a $2.57 billion valuation. The total equity investment of $1.1 billion raised in this transaction will be used to pay down existing debt, purchase a portion of the equity owned by existing E2Open owners, and conservatively capitalize the company's balance sheet. The transaction includes $520 million fully committed common stock PIPE at $10 per share. Upon the closing of the transaction, the name of CC Neuberger blah, blah, blah will be changed to E2Open. The stock ticker will be E2, ETWO. Very cool stock ticker, okay? Now, the rest of this stuff in the article we're going to cover in the investor presentation, so we'll get into that in a second. But I want to look at the chart with you real quick and show you here. Again, after hours, it's trading at $11.94. I'm looking at my Robinhood account right now, and this has gone on a really good trajectory over the last week or so. It really, really has. But again, this really, for a long time, this wasn't getting above, what, 1150, something like that, 1140, and now it popped a little bit in the last few days. So pretty excited. But for the longest time, even after the announcement, this was trading in the 10-something range, 10-something. And it's not because there's anything wrong with the company. Honestly, I was trying to find something wrong. Now, they have about $300 and some million worth of debt. but they plan on paying that off with the fully committed pipe. Now, I do want to point out one other thing. In December 22nd, E2 Open and PCPL announced an additional $175 million fully committed to the pipe, okay? So that's really important because we already have, let's go back to this Seeking Alpha article, 520 million plus 175 million is another, what, 690 or so? Almost 700 million now instead of 520. So that's going to help them, again, pay off their debt and buy out these existing owners here of E2 Open. Okay, that's really, really important to note because they're going to have more shares that the company controls and not just, outside shareholders. So that's important stuff. We're going to jump into the investor presentation right now, and we're going to go over this investment thesis here. Okay, so they have a large and growing total addressable market with significant white space. What white space is the in between the services and the products where that stuff hasn't met yet, right? So what a company like E2 Open can do, it's actually 100% software as a service platform, which is really, really exciting. We're going to get to that in a second. But the white space is essentially where they can jump in and say, hey, actually, if you use this software as well, we can save you blah, blah, blah kind of money, and they create more revenue for themselves, okay? And we'll see where you're going to see with the net retention rate that this is a very sticky product, but they're actually getting their customers to spend more and more money every year, which is really, really exciting. So they have a $45 billion total addressable market right now, and that total addressable market is slated to grow by 12% at a compounded annual rate of 12%, okay? Now, extremely high quality business, end-to-end 100% cloud-based software as a service platform, unique proprietary self-reinforcing network and data, extremely compelling value proposition for customers, mission-critical embedded solutions, sticky product, sticky long-term blue chip customer relationships. Now, a 95% retention rate is very, very sticky. What a sticky product is, it's like think of Netflix, right? Most people just keep Netflix forever and they don't worry about it. Maybe your gym membership, your Planet Fitness gym membership, on average, they have like 7,000 members per gym. Did you know that? 7,000 members per gym. Do you ever see more than 50 people in a Planet Fitness? So sticky products are usually relatively inexpensive, or it's a necessity for the business. And it's not only a necessity with this kind of thing that E2 Open does, it also saves businesses money, like on the scale of millions of dollars per year to use this type of service, because we'll get into it in a little bit. Inventory control and logistics are super, super important to businesses. I used to actually run a warehouse and on the like consumable industry, and we'll talk about that in a second. So I have a little bit of experience with this industry, but this is a very 95% gross retention rate is a very sticky product. This is a very good thing. Now, compelling entry valuation. Every SPAC tends to try to pump you up about these numbers, but these are actually pretty decent numbers. So fiscal year 2021, enterprise value of 7 times revenue, okay? And 21 times EBITDA multiple. Again, this is a company that has positive cash flow. They're making money. They have a good amount of revenue. We're going to talk about and dig into those numbers in a minute here. This is a 100% cloud-based SaaS platform. That's important because when we get into, you can see it here if you're cheating and looking ahead and not listening to me. Don't do that. No, I'm just kidding. Do it. They have a 73% gross margin. Those are really, really good numbers. If a lot of us are familiar with like Open Door and IPOB, like trying to run their business on 5% margin and people are freaking out about it. It makes sense, but they're going to be increasing the services that they offer, and they'll get closer and closer to really high margins down the road. But E2 Open, again, this is flying under people's radar. It's under $12 a share, and they have super, super high margins, really, really good revenue. This is fiscal year 2022, estimated revenue of $367 million. Again, 73% adjusted gross margin, 33% EBITDA margin. It's really, really good stuff. 83% of their revenue comes from subscription-based reoccurring revenue. That's really, really important to know. Again, 95% gross retention, so very, very sticky product. And here we go, net retention rate. This means that they get their customers to spend 7% more on average. That's a really important figure because they can tap into their customers for additional revenue. And we're going to get into that total addressable market here in a second, okay? They have 14 years of top 100 customer average tenure. So that means like a company like, and we're going to get into the companies that they're involved with, a company like Campbell's or something, on average, the customers have used their product for 14 years. So that's really, really good stuff, okay? Now, 1 billion of white space opportunity with existing customers. So this retention rate here can continue to grow, and they can tap into a ton of revenue, a ton of available revenue with just their existing customers. But my bet is they're going to continue to grow because we're going to show you in a second, they're really the only end-to-end platform out there that covers everything logistics and supply chain management, and we'll talk about that in a second. We're going to get into this last part here in a second, but 8 billion plus data points. So they're a very data-driven company. We're going to talk about how important that is for them here in a second. So here's all the data that they collect. Again, 8 billion plus transactions annually by 220,000 plus enterprises all over the world. They fulfill a massive amount of orders, 61 million orders, 17 million invoices, 58 million shipments, 480,000 supply and manufacturing nodes. 26% of global bookings run through E2 Open, so they have a massive market share. 46 million containers tracked per month, 9 million bookings per month, 17 million bills of lading per month. They're absolutely massive, and $2 billion worth of claims processed per quarter. And again, I think this is flying under people's radar because it isn't in the space that anybody seems to care about right now. But again, this space is very, very, very important. It really, really is. Get right into their customer base, and they have a massive customer base. Their top 100 customers on average spend $1.2 million with them. That's the average subscription revenue. That's absolutely massive. They have 1,000 plus total customers, 125 plus customers with 10 billion in annual revenue. And you can see some of them here. I mean, Dell, Google, Intel, Nokia, is that still a thing? They still making phones? NVIDIA, Xerox, Zebra, Boeing, Honeywell, Rolls-Royce, Caterpillar, on and on and on. Campbell's. You want your Wheaties? If you want your Wheaties or your tomato soup, you need this company. Just saying. Mars, candy bars. You want your candy bars? You want your Clorox wipes to get rid of the sickness? You need this. Guys, this is a massive company with a ton of different customers. They work in the transportation field as well. So UPS, DHL, GlaxoSmithKline. So in like the biomed area, BlackRock, they really do a ton of stuff. So they're in the finance space as well. So for their customers, they have a huge value proposition. We're going to talk about that real quick. So think of customers like Campbell's, Kellogg's, Coke, things like that, okay? Things that have somewhat of a shelf life, okay? It's probably really important to be able to control your inventory with stores, right? Because as a company, as a big company, you can get a lot of chargebacks if you send too much inventory. So it's really important to control your inventory. So that's what we're going to talk about here. So leading consumer packaged goods company, cut forecast error by 40% and reduced inventory by 35%. Every product forecasted every day using machine learning and artificial intelligence. If you can reduce your inventory chargebacks by even 2%, you can save millions of dollars over the course of a year. Like it's a crazy amount, seriously. So 10 to 20% inventory reductions, 15 to 50% improvement in forecast accuracy. So that's huge stuff. Being able to forecast your inventory is very important. Leading high-tech company, $300 million in savings over 3 years, almost half inventory related. So they've saved their customers a ton a ton. So they have a huge value proposition. So we're going to show you this slide here real quick. They are the only provider that offers comprehensive end-to-end execution, planning, and procurement services. They're the only ones. And it's 100% SaaS-based, subscription-based. That's it, right? And in terms of their enterprise value, which will probably be close to $3 billion now, based on how far the SPAC has gone up, they're very attractively priced right now compared to their peers, okay? They really, really are, compared to how many customers they have, how much, what, kind of EBITDA margins they have. All of this kind of stuff is really, really important. So again, their valuation, 7x 2021 revenue, not too bad, 21x 2021 EBITDA margins. So again, not too bad. So that's really all I have for PCPL and E2 Open. Guys, again, this is for one of my elite patrons. You know who you are. Thank you so much for bringing this company to my attention. I had heard a tiny bit about it before, but I didn't really do any research into it. I'm excited. I really, really am excited for the long-term viability of this company. I have no idea where it's going to go in the short term, but in terms of a long-term play, this business is a necessity. And I think that they're really going to put themselves in the forefront of people's minds eventually. I think they're going to increase their market share. Like we talked about, the 26% market share that they had. I think that will increase in the future because, again, they're an end-to-end platform. So again, I'm excited. I'm excited for this company. But as always, let me know what you guys think. Did I miss anything? Am I wrong? I want to hear from you. Seriously. Guys, thank you so much for joining me for another video. As always, if you didn't already do it, click that beautiful red subscribe button down below, and I'll see you in the next video. Thanks.